we need to have understanding. We need to have an understanding about the organization that we are going to audit. We need to have an organization that we need to have an idea about the organization we intend to record. So what happened here is that we need to have, before we accept the audit, or before we accept the engagement, that is, before the auditors accept the engagement, they need to plan how they will go into audit the new firm or their client. But the first question that they ask themselves is the client involved in any fraudulent or illegal activity? So that's the first question they ask themselves. That is the client involved in any fraudulent or illegal activity? So this question will be based on their background investigation about the company. So they then ask, what industry is this organization find themselves in? So what is the nature of the industry in which they are involved? And then the next question is that, do they have any history with the previous auditor? And then why did they change the auditor? So we do need to have understanding. So in getting to know whether they engage in any fraudulent activity or illegal activity, the things they'll be asking and the things they want to understand about this particular aspect is that they want to know the nature of the industry that this organization or their client fall into, and then as well to whether they have a history with a particular auditor. So if they have a history about the particular auditor, what type of report did the person write on that particular company? Then you also ask another in quest to ask another question. They ask the client that they are going to audit, the directors, do they understand their role and how they'll be able to carry out their activity? That's a question that they also ask under this client involved in any legal activity. So we need to find an information, or need to get a background information about this client we intend to audit. The next question they also ask is, are management trustworthy? Trustworthy. Are they trustworthy? So this one, the auditor is concerned about his reputation. So before he goes into associate himself with that particular company, he need to ask himself, or need to ask this question, the firm needs to ask this question, are the management, are they trustworthy? Because it will be an issue about reputational risk. There's reputational risk. So this is the risk that the auditor seeks to avoid. Because if the auditor goes to audit a company that one or the other they have involved themselves in illegal activity, it will affect its reputation. So reputation risk. So we are asking ourselves, are they associated with any poorly issues that is likely to affect their decision? Then in doing that, the auditor needs to also find out that, okay, if I'm able to know all this information, then it will inform me that, okay, based on my background check about the organization, I think I can go in for the company. So before they plan the audit, or before they go accept the engagement, they begin to do this investigation about the organization. Now, let us look at another aspect, that is the precondition of an audit. We want to know the precondition of an audit. So before auditors accept the engagement, you want them to have some conditions being satisfied, because auditors should only accept a new engagement when it has been confirmed that the precondition for the audit, everything is present before they go in for that particular. And what are the preconditions? The first one is that they ask, have they considered the financial reporting framework? So they'll look at the financial reporting framework. So look at the entity, they will check the entity, and as well to, they will also will consider the purpose of the financial statement. That is the preconditions that we have. The purpose of the financial statement, because they want to know the laws that they have used in the preparation of the financial statement. So they will understand, after considering an entity, they also know the purpose of the financial statement. And we all know we have 5 main financial statements. So they will look at that. Then the next one they will also want to ask is that, who is responsible for preparing the financial statement? So who is responsible for preparing the financial statement? So if they're asking who is responsible for preparing the financial statement, they are looking at the management responsibilities. So they are looking at the management responsibilities, because management is responsible for the preparation of the management is responsible for the preparation of the statement. So that is what we have. Then the next, under the management responsibility, they want to know whether management also have put in place internal controls. Internal controls, because management are responsible for ensuring that they have internal controls being present in the organization. And then they want to know, because we are looking at the responsibility, we all are aware that management are responsible for providing relevant information to the auditors when they request. So as part of management responsibility, they are there to give auditors all relevant information when they request. So as part of the precondition of the audit, they getting to know the entity and the purpose of the financial statement. We also have to also note that management have responsibilities. They are responsible for preparation of the financial statement. They're also responsible for ensuring that there is internal controls They are also responsible to give relevant information to auditors when they are that. So if these preconditions are not present, then the auditor will not accept the engagement. So all this one, two, A and B, they must be present before the auditor will accept the engagement. If not, the auditor will not go in for that particular audit. Now, let's look at accepting a new engagement. So we have looked at the precondition of an audit. Let's look at accepting new engagement. So if an auditor wants to accept new engagement, or the auditor should ensure that he screens the organization or the client to such a way that there will be no high risk of engaging him or herself when auditing the organization. Because an auditor is concerned about reputation risk. So if he's concerned about the reputation risk, he has to ensure that he screens the organization very well. Now, when they are they are accepting the a new engagement, I said earlier that they have to screen the organization. They have to screen the organization and ensure that there is no high risk. There is no high risk. So now, when they are accepting the engagement, there are some other questions also that we can also ask in addition to whether the business is engaged in any fraudulent activity, in addition to the nature of the industry that organization is. So apart from the ones I stated over here, that the nature of business that they are engaged in, as well as to whether they are engaged in any fraudulent activity, before they accept it, they will also want to know whether management have accepted their responsibility. So as part of accepting the new engagement, the auditor asks himself a question. Does the client, directors, management understand their role they have to play in this audit exercise that they intend? Then as well too, they also ask themselves of this, are management trustworthy? They also ask that. So before they, as I said, accepting a new engagement, we need to know whether the business is engaged in illegal activity. We need to know the responsibility of the management in terms of the directors, their role that they play in terms of the nature of their industry, as well as to we need to have history about the previous auditors. The reason why maybe they are changing the auditor in case they already had an auditor uh, before they decide to call the new auditor. Now, the other areas also that they can also understand. So other areas that could also help. The other areas is they want to look at the market and its competition. They want to look at the market and its competition. That is the new auditors. So we have to examine the market, know the competition over there, know the legislation that that is involved in that particular jurisdiction. So if they happen to find themselves in Ghana here, they need to understand the Companies Act. If it is a company, Companies Act at 99 to 2019, they need to have an understanding about them. Then as well to know if it finds itself in a particular industry, they have maybe the banking industry, they need to have an idea about the banking industry. Banking industry. Please, can you all see my screen?
Yes,
All
Yes, please.
right, right.
please.
Thank you. So we need to have an idea about the legislation and the regulation govern the operation of the business. So doing that, doing that, we need to also have an idea about the ownership of the business. We need to have the ownership of the entity. So who are the owners? They need to have understanding about them. So the ownership of the entity. Because if you are going to plan an audit, you are going to an audit and you don't know who owns the business, it becomes problematic. Then as well to other areas, they can look at the nature of the products of the organization, or maybe the type of services that they are providing, and as well to the nature of their market. So they know the market and the competition that is over there. So then as well to they want to understand the nature of the market. You need to have understanding about the nature of the market. So if they are having understanding there too, they are saying that they also need to have understanding about the key customers of the organization, as well as the suppliers, as well as of the suppliers, as well as the suppliers. Then other areas again, they can also look at the capital expenditure or capital investment of the organization. So capital investment activities of the organization they are going towards going to audit. Because if you are going to audit and then you don't know the type of investment that they have made, so it will also affect your work. Then as well too, they need to have an understanding about the accounting policies that the business is using. And then as well to the industry specific guidelines or guidance, industry specific, industry specific guidance, guidance. They need to have an understanding about them. So then also they need to understand their financing structure, whether the organization is financed solely by equity or solely by debt, or they have a mixture of the equity as well as to the debt. So at least with these areas, they'll be able to plan the audit very, very well. They'll be able to plan the audit. So these are the things that the organization, or these are the areas that the organization that is a firm, the firm that is going to audit must have an idea about all these before the person go into audit that particular company. So now, if they are going there, what are the engagement processes? Yes, please. What are the engagement processes? Because if you now have an understanding about it, what will be the new engagement processes? Process that you need to follow. So the first process that they need to follow when they are going to audit the company is that the client should be asked for permission to contact outgoing auditors in case there is one. So clients should be asked for to contact permission to contact the outgoing auditors. So they need to able to ask permission from the outgoing auditor. So they ask permission from the client so that they can contact the outgoing auditors in case there is any, so that they'll have the understanding about the business. How that the initial engagement, as well as to get to know history about this particular organization they are going to do. The second point is that they the outgoing auditor ask if there is any professional reason not to take the role. So they will ask permission from the client to contact the outgoing auditor. Now, if they are able to contact the or the outgoing auditor, what they will do is that they will ask if there is any professional reasons not to take the role. So they will contact the outgoing auditor to ask if there is any professional reasons not to take reasons not to take the role. So if they have asked permission from the client, then they will now contact the outgoing auditor and ask if there is any reason not to take the role. Then again, they will also ensure that the process of appointment and the resignation of the previous auditor was carried out correctly. So the engagement process, again, another one that they do is that they ensure process of appointment and resignation of previous auditors or previous auditor was carried out correctly. That is what you must note correctly. So they want to ensure that when they were appointing the previous auditors or the previous auditor, it was carried out successfully. And even the one who resigned before they came in also was carried out correctly. In that case, they are going to accept the engagement. Another thing that they are going to ensure is that is the new engagement process, that they will ensure that there is no independency issue. They
Hello,
will
Doctor.
ensure. Yes, please.
Good evening, Doc.
Good evening, sir.
Yes, sir. Please, I want to verify. I want to ask.
Right. Yeah.
Yes. Is it the case that when you go for the services of auditors,
Yeah.
as a company, as an institution, you can't change them? You can't say that, okay, at this point, I want to have a fresh mind, so I don't want the services of this auditors again. I want this. If that opportunity is there, then why is it that the one coming should do all this, go contact and have discussion with the one that is going, and before they can carry out or accept the new offer?
Okay. Thank you for your question. So now, before you ask the previous auditor to go, there was some sort of engagement with the previous auditor. So you said, as you said in your words, you wanted a fresh mind. So you decided to change your auditors. Now, when you change your auditors, you have given your reasons for changing the auditors. And the auditors who went away agreed that they will go. Now, because you have gotten that the other auditor is gone, the new auditor who is coming may have not audited your company, have no information about your company. But then he needs to also have knowledge about what had happened in the past so that he can plan his audit very well. That is the reason why I said the first point is that you need to seek permission from your company yourself. Whether would you agree that I contact the outgoing auditor or the previous auditor? All right, so I'm back here. So if if you ask, if you ask, and then they are not giving you the permission to go and uh, seek or talk to the outgoing auditor, then the new auditor would then begin to advise himself. Maybe something may have actually happened in the past. That's the reason why you are preventing me. But if the processes of you appointing the previous one, the process of you asking the previous one to leave, or the person resigning by himself was carried out correctly, why would you prevent me from going to seek information from the previous auditor? This thing, it normally goes on in practice. It has to happen. Unless otherwise, the company has not been audited before, and it is the first time you are going to audit the company, and there is no previous auditor, then you don't have to go and ask any information from anyone. Then you carry out your processes. You carry out your processes. By then, if they had a previous auditor, then it will be prudent they ask them, because it is their part of the engagement process they need to do before they accept the audit. Senior, please, are you okay?
Yes, doc. I'm fine.
Okay. So, in ensuring that, the process is thoroughly carried out, I said that they also have to ensure that there is no independency issue. Because if there is independence issue, it means that it will affect the audit process. The audit process. Another thing also they ensure is that they ensure that during the audit, the engagement process, they also ensure that the firm is properly, the audit firm is properly qualified to act for the client. So even if the auditors themselves, what they also do is that they also will ensure that though they have been asked to audit the firm, they want to know their competency level, whether based on the industry that they find themselves, based on the product the business is engaged in. Is our firm qualifying to audit the organization? So I'll write here by saying ensure that the audit firms is properly qualified. So we want to know whether the audit firm is probably qualified to act for the client. So this is what the audit firm also do. They want to know whether the audit firm is probably qualified to act for the client. Now, after doing that, then they now undertake their risk assessment of the firm. So in the process, they undertake risks assessment of the firm. So they will begin to know where the areas is risky, that maybe they have to do more audits. They need to add more things to where they want to audit. You have to have understanding of that particular risk areas that they need to look at it very, very well. Then as well too, you want to ensure that the audit firm has adequate resources to conduct audit. So again, after looking at being the audit firm being qualified, they also want to ensure that the audit firm have adequate resources to conduct the audit. So ensure that the audit firm has adequate resources to conduct the audit. And the eighth one, they also will consider the size of the client, because if you are going to audit a firm and you don't consider the size, then it will affect you. So they'll consider the size of the client. They will also consider the business areas. Then as well to look at how the size and these areas can affect the audit. So how they will affect, how these will affect the audit. So they look at the client or the business area, the size of the client, and as well to the business areas and how these will affect the audit. Because if you have a big size, if the organization is so big, what it means is that they need to know the type of resources they need to employ in what? In ensuring that the audit comes successful. Then in the last one, they can also look at what is the level of fees. Level of fees. That is the audit fees that will be provided. So in the engagement process, they need to go through all this before they can start the audit. So there's the new engagement processes. Any question over here before we go to the next one? Now, if we have learned about this engagement process, then there is what we call engagement letter. And this engagement letter is a letter from the auditor to the client indicating the various matters that is concerning this particular engagement that they are going into. So as they are going through this new engagement process, the auditor issued out what we call engagement letter. Engagement letter. And I said, this letter is from what? The auditor to who? To the client. The auditor to the client. That's a letter from the auditor to the client. And it's indicating the various matters that are concerned before they go for this engagement. So now, when this letter of letter of engagement or engagement letter, it's sent. It is mostly sent to the client before the audit. And this letter will confirm the acceptance of this engagement. So what it means is that it will be a letter to the client. So it's a letter from the auditor to the client. So a letter from the auditor to the client indicating the areas of concern of the engagement. And as well too, it is sent before the audit, before the audit starts. And most often, it confirms the acceptance of the audit. So it confirms the acceptance of the audit. That is the engagement letter. Now, there is auditing standards that govern this engagement letter. We call it ISA 210. And the name of it is Terms of Engagement Gives Guidance. So this is terms of what? Engagement. Terms of engagement. So this one will tell the terms of engagement, and it will give how they should carry out or how they'll be able to carry out that. So with these terms of engagement, there will be a content. There will be a content. And we are going to look at the content of this engagement letter. One, they'll look at the objective of the audit. So in this engagement letter, we'll look at the objective of the audit. Why are they going to do this audit? So we look at the purpose of the audit. Then it will look at the management responsibilities. Management responsibilities for the financial statement. Management responsibility for the financial statement. So in the content, it will be there. They will talk about the scope of the audit. So in that same engagement letter, there will be the scope of the audit. And with this scope of the audit, they'll look at how they are referencing their audit to the legislation, the regulation, the professional standards that will govern their audit. So in the scope of the audit, we can say including references to legislation and professional standards. Professional standards. So all this will be addressed in the content. Then as well too, they will tell the form of report to use or to be used. So we will look at different types of audit reports, but then in the engagement letter, it has a particular content. So in the content, they will tell them the form of report that is likely to be used. Then as well too, in the engagement letter, they will also state of the use of work of the internal audit. Use of work of internal audit. So what it means is that if the organization have internal auditors and they have been going through the work, the documents before they are being processed, when the external auditors come, they will also take a work of the auditors, the internal auditors, and look through. Also remember that the internal auditors are what? They are the staff of the organization. So though they have worked well, but we think that external auditors can also look through their work and then determine the type of work that they are supposed to do. Then the next one is that they will make reference to inherent limitation of an audit. So in the audit, they will make reference to inherent limitations, inherent limitations of the audit or of an audit. So they will tell management or the organization that or its client that these are some of the limitations of my audit that I intend to do. Then as well to in the same content, they will state their how they should be allowed to access the information of the organization. So they will look at the access to information. They will pay attention to access to information to be allowed. So that is how I would say they'll mention in the content that management need to be, give us access to the information that we need. Then, as well to they will talk about the deadlines and the confidentiality concerning this particular engagement or this particular audit. So they will look at the deadlines and the confidentiality issues concerning the engagement that they will talk in the engagement letter, they will talk about the fees. In the engagement letter, they may also talk about the expectations of management, management representation. So what management are likely to say concerning some of the issues that they will raise during the audit. Then as well to if there are complaints, what will be the procedure? So complaint procedures, they will also raise all that in the audit. In the complaint, if there are complaint procedures during the audit, how they are going to address them, they will state all that in the engagement letter. Remember, I said this engagement letter is from the auditor to the client, and we have the content. So we are just looking at the content, that the objective of the audit, the management and responsibility for the financial statement, look at the scope of the audit, including the reference to the legislation and the professional standards. They will also make known of the form of report to be used. They also look at how they're going to use the audit works as well. They will make reference to the inherent limitations of this audit that they intend to do. Then as well they will also seek permission to access information from the organization. They will talk about the audit fees, the deadlines, the confidentialities. Then they will expect management to make some representations to this engagement, and then as well to the compliance procedure. So these are the issues that goes into the engagement process where an engagement letter will be issued. Where an engagement letter will be issued. Any question? Okay. So since
Hello, Doc.
yes, please, I'm listening.
Yes, Doc, I want to verify. So this is, let's say, a private entity's work where a private firm employ the services of an auditor.
Yeah.
Okay, so the when you publish financial statements,
Mhm.
you publish and it is for public consumption,
Mhm.
but the audit the audit report, is it also published in addition to the financial statement, or that one, because of the confidentiality of it, the company keeps it to itself?
Okay. So when they prepare an audit, the key issues that they raise that management responded to them. That is why the management representation they respond to them. They don't include it in the one they publish. The one they publish, so you see, they have to, when they are writing the report, they have the ones that they will show to the public and the ones that they will keep it and they will give it to only the client to have it, so that the internal auditors in the organization or the audit committee in the organization will ensure that they comply with all those things that were raised during the external audits or external auditors coming around to audit the organization. So it is not all the information that they give out to people, the public, because if there are some issues that are so confidential and they leaked it out, what it means that it will affect the reputation of the organization. Then as well to the auditors also will be affected for breaching this confidentiality principle.
Okay. So,
Right.
can I add up?
Please, you can.
Okay, so I want to find out. We usually hear some radio stations pick up portions of Auditor General's report.
Mhm.
That one is because it's for the public corporation. Is that the reason why these stations, Joy and Co, are able to get access to it, or that the public one doesn't have any confidentiality?
Okay, the public one have confidentiality. So you realize that before they will come out with this audit report, before the media will get it, they would have sent, the Auditor General would have sent the report to the Parliament, and then the Public Accounts Committee would have called the people over there to come and answer questions. So based on that, that is when we pick the information. But if they go at the back and then leak the information, they have breached the confidentiality. But some of the information, don't need to leak it. That's why there are certain things that the politicians will make it known. The other things is when they go there, they keep it because of confidentiality issues. So it's not all the information in the auditor's report, it's what they make known. There are some information the auditors themselves, the auditor general keeps it for records and ensure that, you see that some of them, they will say, they make it known to us that maybe the that is audit, the public accounting committee, there are some things that will raise when they are asking management, why do you do this? Why do you got the auditor report said this? Why did you do this? And when you answer them, some of them they will tell you that go and then work on the auditor's report. Because some of the information it is not known to the public. Probably only get to know it when the politicians mention them. But when the media gets it, they are not supposed to give it out. But there are some information they're not supposed to give. In Ghana here, any information that we take, that they will be just sharing, which is not good. Because our information are confidential. You need to keep them. Senior, please,
Yes, dog. I'm fine. I'm fine. Thank you very
right.
much.
You are welcome. So now, let us look at the stages of audit. Stages of an audit. So let us look at that one, then we continue from there. Stages of an audit. Now, the stages of an audit, we have one, appointment of audit. So we have the appointment of auditors. 2, we look at the plan of audit. 3, they will look at the understandability, or they have to understand the audit. So these are the stages we are looking at. So appointment. So then you need to plan the audit, understand the entity. Then another stage is assess the risks of material misstatement. Assess risk of material misstatement. So risk of material misstatement. Another one is that when they are done, after assessing the risk of material misstatement, they do now respond to the risk, or respond to risk. In responding to the risk, there are things that they do. They ask themselves, do the company have effective controls, or they have ineffective controls? That is when they are responding to the risks. These are the things that they look at, whether there is effective controls, or there are no effective controls. If there are effective controls, then let us test the controls. That is what happened. So if they are effective controls, let us test the controls and see whether we are okay. So then when we do that, in seeing that we are okay, then when we are okay, then it means we've gotten to the satisfactory stage. Then they reduce the substantive procedures. We will look at all of them, but I'm just giving you the stages. Those are the things that we will be learning in that when they are going for an audit. That are the stages of an audit. Look at the effective controls. They will test whether the controls are good. If they are satisfied, then they will now reduce the substantive procedures. But then, if they are not okay, if the controls are not okay, then they try to report all the significant deficiencies to those charged with governance. So if the controls are not okay, then there's ineffective control. They report significant deficiencies. They report significant deficiencies, sorry, to those charged with governance. Those charged with governance, they are the people who control, that is what, the management, and then who are also part of the client, those charged with governance. So when they report to them, then they will do full substantive procedure. We will look at these procedures in the course of our study. And when they do full substantive procedure, they will also do an overview of their financial statement. So if they want to respond to the risk, they ask themselves, do they have effective controls? And they will test the controls. If the controls are not good, they can report it to those who are charged with governance. So when the controls are not effective, when they test the controls and they are not okay, they will report to them. But if they are okay, they will use the substantive procedure. That is what you must note. Then, when they respond to that, they will now do what we call overall. So another stage is that they will do overall overview or overall review of the financial statement. Overall of the financial statement. So when they do the overall review of the financial statement, then they'll report the issues to management. And when they report the issues to management, they will now tell management that they should now make some representation to respond to some of the issues that they have raised. If they are able to respond, fine. If they are not able to respond to, they will still have to write their report. So they will now have the auditor's report. So when we come to the stages of an audit, when they appoint the audit, they plan the audit. The auditors need to understand the entity. They need to assess the risk of material misstatement. They need to respond to the risk, ask themselves, are there effective controls or there are no effective controls? If they are effective controls, they test. If the controls are not effective, then they will rather look out for what? They will report the significant deficiencies to those charged with governance. Then, if they report it to them, they'll do substantive what? Procedures. They'll do substantive procedures. But then, if they are not okay, if they are okay with the test of controls and they are satisfied, then they reduce the substantive procedures. So when they reduce the substantive procedures, they will do the overall overview of the financial statement. Then they will report some of the issues to management, and then they will write their report. Now, if they are doing substantive procedures, what they actually mean is that they are trying to gather conclusive evidence about the accuracy of the financial statement. That is what they do. So some of is that they have some assertions. Okay, these figures in the financial statement, is it okay? They'll check the valuation. They'll try to detect if there are material misstatements in the financial statement. So all these things are done during substantive procedures. So when they realize that the controls are effective, that one, do not do more detailed work. But if the controls are ineffective, then they will do detailed. That is what they do. So this is what happens when they have that. So if they are planning the audit, we need to go through all these things and then understand. Now, since we have learned about the stages of audit, let's zoom into audit planning. Since we've learned about the stages, we've learned about the things, engagement letter, we've learned about this engagement letter, the component. Let's look at audit planning. Now, audit planning, one or the other, is just looking at how we plan for an audit. So this thing is governed by ISA 300. So note that. And the name of it is Planning and Audit of Financial Statement. So planning and audit of financial statement. So if they want to plan an audit, they go through this standard before they plan the audit. So why is this planning so important to these auditors? The reason is that if they don't plan it, they will not be able to carry out this audit effectively. So that is what we know. Because the company may have a lot of branches. The company may have a lot of areas they need to look at. So if they are planning and they don't have an idea, or if they are not able to plan and plan well, then it affect their business. That's the reason why they need to plan and plan very well. All the things is that they need to come up with some ideas that the general strategy on
Doc,
how they will carry. Yes, please.
it's like your line is breaking, so I want to draw attention. I don't know
Okay.
whether it's from my end.
Please, is it the same for everyone?
Yes,
Yes, please.
for some few minutes it goes and come. Your voice goes and come.
Okay. Hold on.
Please, can you hear me now?
Yes, sir.
Okay. So what happened is that if they are planning an audit, we said that they should plan in such a way that the audit will be effective. The audit will be what effective, because there are several areas they need to cover. So if they don't plan it very well, it will affect it. So that's the reason why they need to plan. So now let's look at the objective of adequate planning. Let's look at the objective of adequate planning. Adequate planning. Now, when they are conducting an audit, they need to give appropriate attention towards important areas, especially where inventories are so high, where the volume of transactions are so high, where trade receivables are so high, like the debtors are so high. So I'll say that the one of the objectives of adequate planning is to give appropriate attention to important areas. Important areas. That is what. So the important areas I said, where inventory are so high, where cash transactions are so high, is like when they do the adequate planning, they'll give an important or appropriate attention to the important areas. Another one also is to identify potential problem. To identify potential problems. So maybe if the company maybe has recently changed their their way of recording transaction into a computerized system, what are some of the problems that they are likely to face because they were switching? So recently, maybe the company was using paperwork, and all of a sudden they have changed from the paperwork to the computerized one. What are some of the issues that they are likely to face? So identify the potential problems is very key when they are doing the audit. Then as well to ensure that maybe the right number of staff are in the audit team and they have the right skills. So to ensure that the right number of staff are in the audit team, and they have the right skills with the right skills. That is what I mean. So we need to find out whether they have the right number of staff in the audit team and they also have the right skill. Another way of also ensuring that the planning is adequately, they have done the adequate planning is that they do that to facilitate the direction and the supervision of the audit team. So we can say to facilitate the supervision and direction of the audit team. So if we are organizing the audit, they want to ensure that the people over there, they are well supervised. So they need to do that. And then as well to maybe it's a direction of supervision and direction of audit team, and as well review their work. Review of their work. So if they plan the audit engagement very well, the audit exercise very well, they'll be able to know that, okay, at this point in time, this is where we do the review. At this point in time, this is the direction that we want to gain. That is what you must know. Then the next one is maybe also to coordinate with other partners or other parties, if any. So maybe if they want to realize that at some point in time in the engagement letter, you tell them that you want to use the work of your internal audit. So at this point, when they are planning the audit, what will happen is that they also say they want to coordinate. The purpose is that to coordinate with other parties. Example, internal auditors. So this thing helped them to carry out the audit successfully. So this is what normally happens when they are planning the audit. Now, when they are planning the audit, they do some documentations. So we also have planning documentations. Now, with the planning documentation, we are just looking at the overall strategy of the audit that we are going to do with. So with the plan audit documentation, we are looking at the overall strategy that is setting up the scope, the time. So it looks at the overall strategy, the overall audit strategy. And with this overall strategy they are talking about, it will set out the scope, it will set up the timing, it will look at the direction of the audit. So in doing that, what are some of the matters that they normally do that? So when they are documenting, they look at the overall strategy, that is scope, the timing, the direction of the audit, and some of the guides that they need to undertake this particular audit. Now, what are some of the issues that they do address during this documentation processes? They look at the allocation of resources, because the auditor needs to plan the audit very well. So you need to know the allocation of resources to the specific audit areas. Audit areas. So they look at the number of people who need to be here, the number of people who do the inventory count. They will look at all of them. All this thing is done during, they'll do that by documenting. Then they'll look at the resources required for the specific audit. So they'll do the allocation of the resources. Then as what in the documentation process, they do resource, they want to know the resources required for specific audit areas. So if they need a special expert, that is where they'll go in for the expert. In the documentation process, when the resources or when resources will be deployed, or when resources are to be deployed. So at each stage, what are the things we need to do? Because we look at the stages of audit, and we are now looking at when they are planning the audit. So the stage of audit, we've got to do the planning, and we've learned about adequate planning. We are now looking at the planning documentation, and we said that when resources are to be deployed, it's part of the documentation process, and then how resources are to be managed. How resources are to be managed, directed, and supervised. So this is what happened. So you realize that the first stage, I said I'll talk stage, so the plan of auditors is what I'm talking about. Appointment of auditors, we've talked about that. The plan of audit is what we are looking at, that the audit planning, and that there is what planning documentation is what happened. If they are planning the after planning the audit, they need to understand the environment. The second stage is what? Understand the entity. So the next one we want to look at is understanding of the entity. So the stages is what we are looking at. Understanding of the entity. Understanding of the entity. So in understanding of the entity, we need to know the entity. We need to know the environment. We need to know made also. So we need to know the environment. We need to know the applicable reporting framework. So we need to know the applicable reporting framework that they are using. That is understanding the entity. That's where we are now. Understanding the entity. We need to what? Understand the entity, understand the environment, know the applicable reporting framework, and then as well too, we get to know the systems
of internal controls. Internal control that they have. So if you understanding the environment of the organization or understanding the entity, we need to know who are the owners of the organization. What are some of what is the governance structure of the organization? What is the business model of the organization? What things or what are the things the business engage in? What are the applicable financial reporting that they are using? Are they using IFRS? Are they using a particular accounting standard because they find themselves in Ghana? Maybe it's a public company, so they are using they are using IFRS, or it's the business find itself in a different country. So maybe they are using GAAP. You need to ask yourself those questions. Then as well we need to understand the internal control of the organization. So the auditor need to have an idea or understand the internal control of the organization and ask himself, even these internal controls, are they effective or they are not effective? Those are the things that you need to know. Then as well you need to understand the control environment. So whether the internal controls are really relevant for the preparation of this financial statement that they have. So in the system of control, we can also look at the control environment. That is what the auditor does. Control environment. That is trying to see whether the internal controls that the business has or the organization has is relevant in the preparation of the financial statement. That is what they normally do. Any question? Any question? Okay. So this is an aspect where I wanted to get to, and then I'll end, because if the 4 hours straightforward will not help most of us because of the way the nature of the course. So I decided to break the classes into periods. So though we are doing 4 hours, we're supposed to do 4 hours every weekend, but I wanted to break them into periods so that at least when we learn an aspect, you go and look at it and then come back later and meet me. So today, what have we done? We were just looking at the issues concerning the areas, the planning, risk assessment. And we looked at whether the organization is engaged in a fraudulent activity or not. We have looked at engagement and engagement process. We have also looked at the stages of audit. And then also we have looked at the audit planning and as well to the understanding the entity. So the next thing that when we meet, we are going to do again is assess risks of material misstatement. So what I have done today, go back, reflect on it, and then come back another time so as to continue. So thank you very much for your time. If you don't have any question for me, thank you very much for your time. So then we'll meet during our next meeting. Mr. Emmanuel.
Thank you, sir.
Right.
Thank you, sir.
Yes, please. So we'll end here, and then I'll communicate to you our next day of meeting. This Sunday we cannot meet, so I'll communicate the next time of meeting. This Sunday morning we can meet, please.
So this Sunday morning we can meet.
No, please. I will not be available that point. I have an university assignment, so I will not be available that time, that morning. So
I'll be available Monday. Go. So if you decide on a particular day during the week, we can do another 2 hours. So I want to do it. I want to spread it 2 hours, 2 hours. So in the week, if you can get maybe 2 meetings in the week, so that I can do 2 hours, another 2 hours, so that at least your people will understand the course very well. If not, and I bombard with all this, you find it very difficult to appreciate some of the things.
Okay, sir, but it's unfortunate that during the week, it has been all lectures have scheduled within the week. So, like you said last week, you told us that Fridays are days it's possible for us to meet. So, we've added it that every Friday we are going to meet you, so that we can have.
Okay. So would it be okay if I try to meet you Sunday evening? That is Sunday evening. Would it be fine?
Okay. Then the house is here, so let's all discuss. We are all here,
Sunday
so let's
evening.
Yeah, okay.
Evening from 6. Yes, so Sunday evening from 6 to 8. 6 to 8, so that you can rest for a Monday morning class.
Yes, I'm okay with
It's
it.
okay.
Right. So let's meet on Sunday evening, 6 o'clock. Okay. Thank you.
Thank you, sir.
You're welcome.
Hello, class. Please, let's meet on our page to decide on. Hello, please, let's meet on our page to decide on Dr. Stahiru's request. He's saying that he's having
You
invigilating
said we
tomorrow
should
morning.
meet on the page.
He say,
You said we should meet on the page, so don't discuss it.
So let's
here.
go
Yeah,
there
okay.
because the recording is still on.
Okay.
Thank you.